highs before it can go higher. So let's make it prove itself before I want to get on board there. That may have been your line of thinking. In that case, you would not have gotten the fill, and so you'd be sitting there with no situation, no position rather, and looking to then at this candle right here, the candle we had yesterday, and the predicted low that we had yesterday, if you look at that candle on November 9th, was 1257, meaning that you would be short at 1217. 1217 will put that short right in here. I haven't seen all the prices today, but at this point, you would not be short. You would not have a position. You're kind of waiting for that market to drop or to go back above this predicted high that we have here before you would take a position either way. A lot of lines on the screen, a lot of arrows that are pointing there as possible weights to do, but that's kind of what you have to do when you look at the market and try to determine exactly where it is you want to position yourself. It's kind of a study that you have to do every day. It's you put some quality time into your decisions and then try to determine what it is that you're going to do. Now we're going to put this on this particular system or this particular time frame and indicators on a couple of more charts. You have the alternative, of course, of doing it with the spiders, the SPY, SPY, the ETF. Same type of pattern, same types of things. In this case, it's easier, at least in my opinion, it's easier if you're interested in options to, like if you're interested in going short, either sell a call or buy a put. It depends upon your propensity for taking risk, or if you would like to avoid risk. Sometimes you, like in my case, what I decided to do was I thought the market might go down, so I would buy puts. Well, you know that it's a deteriorating asset over time. So far, not working out real good because it hasn't dropped far enough, but just kind of holding it, waiting to see what might happen. As long as that volatility stays up there, there's going to be some value that's retained simply because of the volatility factor. You can look again also at the other index that we have here. We have the NASDAQ. It looks somewhat the same. In this case, we have a situation where we have kind of a broader bottom that it has not broken through. And if you're talking about there, we're talking probably in the vicinity of, roughly, well, a little below 2,300, about 2,280 or so, as being kind of that dividing line if it drops below there, or if it gets above this 2,400 area, that's kind of that breakout of that period of trading that's been going on, not a month yet, but pretty close to a month already. That will kind of give an indication of where the NASDAQ is going, which also is influenced by the S&P, each of them influencing the other. Okay, now to kind of wrap it up, get back on track with where we're wrapping it up with our indicators here, what we're doing, and back to our screen and our trial report presentation to get on track with the indexes. When you're looking at indexes, especially because of the global influence on all the markets, you need to know about the big picture, what's going on in the big picture. You want to get on track, you want to be on the right track, you want to catch the right train going in the right direction where you want to go. But keep in mind that when you're talking about getting on track with the indexes in today's markets, that train that you're ready to jump on, and when it leaves the station, may be a roller coaster. Maybe it's too scary to ride. That's something that you will have to decide. You need to know what is going on in the big picture. You need to know the overriding economically and increasingly even more so on most of the political scenario. And we can't predict what's going to happen. We can only prepare to react when something does happen. You need to especially be aware of the U.S. dollar status. Where is it? And it's the key to so many different markets that you have to know that when the dollar is up, stocks, many commodities are likely to be down, and vice versa. So that's where you get into the real value of intermarket analysis to determine what is going on with prices. Now the other concept with the money is you want to follow the money, and when we say follow the money, it's kind of like the risk on, risk off type of mood that traders are in. Where are they making the adjustments? And I know that sometimes they make it on a daily basis, which is pretty hard to keep track of. But that is a situation that you have to be aware. Are traders willing to take on risk, or are they looking for safe havens and getting out of and getting away from risk? That requires that you have very flexible strategies, something that mentioned before when we had the choppy situation, where you can look at it from the swing trading or a short-term trading, where you have similar strategies. They can catch the kind of some of those pieces out of that broad sideways move. That's option straddles or strangles or something of that nature, or option spreads. If you can kind of define those boundaries. Whatever the case is, you need to be ready to act quickly. And then if it does go up, sometimes you get that little bonanza like we had October 27th if you were long, where you don't want to overstay your market. You don't want to lose out on profits if you are willing to give them to you. Of course, when we look at what is going on, we don't know what's happening with the fundamentals, so you have to keep an eye on the charts and on the indicators. What are they telling you? What's the underlying sentiment of the market, and what does it mean? How is that being interpreted in terms of momentum and strength of trend? And then finally, position sizing, very important in this particular type of climate that we have right now. I think it's better to be on the conservative side. You can be a gunslinger, or you can do what you will, but it's like that old expression. I've seen old traders and I have seen bold traders, but I have seen very few old bold traders. So you have to keep your risk at a manageable level if you intend to stick around very long as a trader. Now, we've run through a lot of different items, and I know I threw a lot of arrows up there, and hopefully answered some of the questions already. But if you have other questions that you would like to ask, I would be glad to answer them if I can. If you have questions about Vantage Point, you should call that number you see on the screen, because that number, we can provide you much more information than I can about the Vantage Point specifics in terms of what's available and how to get free forecasts and those kinds of things. So if you have questions about Vantage Point, you can call that number. If you have questions about strategies or something, I'll be glad to take those questions, or on TraderPlanet.com, you can also ask the same questions. Kind of let me know if there's an area that you would feel like you need to have explained or to explore a little bit more fully. See if we have any questions here. Skipping down through my. Okay, I have a question here, a comment here. The predicted indicator line is again. Please explain again. Okay, I think if the predicted indicator, there are several predicted indicator lines that we're talking about. The first of all, the predicted exponential moving average. That's the medium-term moving average. It is a 4-day